Hmm. So apparently, Fannie Mae and Freddie Mac under the FHFA are going to make some changes to interest rates on specific product types, and it's something that we need to know about. My name is Brent Bruce. I'm the president of Rancho Capital Home Loans. So traditionally, there's three main types of loans or purchase transactions that we lend on. So you have your primary residence, you have your second homes, and you have your investment properties. Primary residence, of course, is where you live. Second homes, if you want to buy that mountain cabin, beach house, something like that. And then investment properties. So if you're looking to purchase a rental, something like that, even maybe a fix and flip or something that might be for investment purposes. So what we're finding out and hearing is that the FHFA, which is the Federal Housing Finance Agency, has determined that they're going to make changes to some of those specific purchase types. We're really focused on second homes. So investment properties, a little bit of change. Second homes, a major change. And then also what's called a high balance transactions, which is still on primary residence as well. So you need to know about this because it's effective April 1st of 2022, but it's actually something that's being worked into the interest rates today by the banks and lenders because they know that it's coming. And by the time the transaction closes, we'll be in April. Okay. So when it comes to second homes, that's the biggest change. So the Federal Housing Finance Agency manages Fannie Mae and Freddie Mac. And what they have done is they've really just increased the price of a second home loan, which means that affects the interest rates. I mean, you're probably going to see interest rates going up by 0.75% to maybe even a full percent on second home transactions just a month ago to today. You're just going to see this change happen because it was implemented by the FHFA. They just said, this is what we're going to start doing. So be on the lookout for that. Traditionally, people like second home transactions because the interest rates really weren't usually much higher than the primary residence transactions. Usually on a second home, you had to put down maybe 10% versus 5% on a primary residence. And that was kind of the fallback. And on a second home transaction, it really needs to be a second home. You can't say it's a second home and then use it as a rental. So one of the things they like to see is that a second home was in more of a resort type community. Like I said, in the mountains, at the beach, at a lake, something like that seemed to make sense as to being a second home. And you kind of had to convince the bank also that it wasn't going to actually be an investment property. So because investment properties usually require 20 to 25% down with Fannie Mae, Freddie Mac, traditional lending, and the interest rates were 0.5%, 0.75% higher than a primary residence. Well, that's going to get leveled off a little bit on those second homes. The other one is high balance transactions. So in certain counties, you have what's called high balance transactions, which is kind of the nationwide conforming loan limit is about $647,000, meaning that if you were buying a house or using a loan over $647,000, that might be considered a jumbo loan. You may have heard that before. So in certain counties, you have a loan type that is above 647,000 up to a higher amount that is not yet considered jumbo, specifically for those counties. There's a couple of areas that are really stand out, which is the Nashville metropolitan area, about 13 counties that are in and around Nashville that allow for high balance loans over $647,000 up to $694,000. There's that high balance area. And then, like, for instance, Los Angeles, they go up into the 900,000s. So there's a lot of areas in the nation that you can go higher and not be a jumbo loan, still be purchased and underwritten by Fannie Mae and Freddie Mac, which is important. And you get better interest rates. However, if you're in that high balance area, over 647,000 up to your county's high balance area, now it's considered a conforming conventional high balance loan, and they're going to raise the interest rates on that as well. They're basically putting an additional cost to those transactions. Why are they doing this? Because they really want to try to keep those homes available. They want to try to keep home prices in a range that the first time buyer might be able to get a hold of that property. They're trying to say, look, if you own a home, we need to make it more expensive for your second home, for your investment properties, because we want that inventory to be available for primary residence buyers. Now, whether that's the right thing, good thing, bad thing, that's not what I'm saying. but I'm just putting out there. This is something that is going to be going into effect. Really, it's going into effect now with some of my lenders. And April 1st, it's really going to be with everyone. So just want to make sure you're aware that if you're looking at a second home or a high balance type transaction, interest rates either have gone up or will be going up soon. And like I say, it could be as much as 0.75% to a full percent in interest rate, especially on second homes. Want to make sure you're aware of that. If you have any questions, please shoot me an email, send me a message back to this. My email address, brent@myranchocapital.com. You can also give me a call at 866-222-0626. We'd be happy to answer any questions that you have and try to help you out. Thanks a lot. Hope this was helpful.